Welcome to our video on the pros and cons of refinancing your mortgage. If you're a homeowner, you may have heard about refinancing your mortgage, but you may not be sure if it's the right decision for you. In this video, we'll discuss the benefits and drawbacks of refinancing your mortgage, so you can make an informed decision. First, let's define what refinancing means. Refinancing is the process of replacing your current mortgage with a new one that has different terms, such as a lower interest rate, shorter or longer loan term, or a different type of loan. Refinancing can be a great way to save money on your monthly mortgage payments, but it's not always the best option for everyone. In this video, we'll cover the pros and cons of refinancing, including the potential savings, the costs involved, and the impact on your credit score. We'll also discuss when it makes sense to refinance and when it might not be the best choice. So, let's dive in and explore the pros and cons of refinancing your mortgage. Let's start with the pros of refinancing your mortgage. One of the biggest benefits of refinancing is the potential to save money on your monthly mortgage payments. If you can secure a lower interest rate, you could significantly reduce your monthly payments and save thousands of dollars over the life of your loan. Another benefit of refinancing is the ability to switch from an adjustable rate mortgage (ARM) to a fixed rate mortgage. An ARM can be a good option if you plan to sell your home within a few years, but if you plan to stay in your home for the long term, a fixed rate mortgage can provide more stability and predictability in your monthly payments. Refinancing can also allow you to shorten the term of your loan, which can help you pay off your mortgage faster and save money on interest in the long run. For example, if you currently have a 30-year mortgage and refinance to a 15-year mortgage, you could save tens of thousands of dollars in interest over the life of your loan. Finally, refinancing can also provide you with cash-out options, which allow you to tap into your home's equity and use the money for home improvements, debt consolidation, or other expenses. This can be a good option if you have a significant amount of equity in your home and need access to cash. Overall, the pros of refinancing your mortgage include potential savings on monthly payments, the ability to switch to a fixed-rate mortgage, the option to shorten your loan term, and the ability to access cash through a cash-out refinance. While there are many benefits to refinancing your mortgage, there are also some potential drawbacks to consider. One of the biggest cons of refinancing is the upfront costs involved. Refinancing can come with fees such as application fees, appraisal fees, and closing costs, which can add up to thousands of dollars. It's important to factor in these costs when deciding if refinancing is the right choice for you. Another potential downside of refinancing is the impact on your credit score. When you apply for a new mortgage, the lender will run a credit check, which can temporarily lower your credit score. Additionally, if you have a high debt-to-income ratio or a low credit score, you may not qualify for the best interest rates, which could negate any potential savings from refinancing. Refinancing can also reset the clock on your mortgage, which means you'll be starting over with a new loan term. For example, if you've been paying on a 30-year mortgage for 10 years and refinance to a new 30-year mortgage, you'll be paying on your mortgage for a total of 40 years. This can extend the amount of time it takes to pay off your mortgage and may not be the best choice if you're close to paying off your current mortgage. Finally, refinancing can also come with some risks. For example, if you opt for a cash-out refinance and use the money for non-essential expenses, you could end up with more debt and a high monthly payment. Additionally, if you refinance to an adjustable rate mortgage, your monthly payments could increase if interest rates rise in the future. Overall, the cons of refinancing your mortgage include upfront costs, potential impact on your credit score, resetting the clock on your mortgage, and potential risks associated with cash-out refinancing or adjustable rate mortgages. Now that we've covered the pros and cons of refinancing your mortgage, let's discuss when it makes sense to refinance. One of the most common reasons to refinance is to take advantage of lower interest rates. If interest rates have dropped since you first took out your mortgage, refinancing could be a good way to save money on your monthly payments. Another reason to refinance is if you want to switch from an adjustable rate mortgage to a fixed rate mortgage. This can provide more stability and predictability in your monthly payments, which can be beneficial if you plan to stay in your home for the long term. If you have a significant amount of equity in your home, a cash-out refinance could be a good option if you need access to cash for home improvements, debt consolidation, or other expenses. However, it's important to use the money wisely and not take on more debt than you can afford. If you're nearing retirement and want to pay off your mortgage before you stop working, refinancing to a shorter loan term could be a good option. This can help you pay off your mortgage faster and reduce your monthly expenses in retirement. Finally, if you're struggling to make your monthly mortgage payments, refinancing to a longer loan term could lower your monthly payments and make them more manageable. However, this could also mean paying more in interest over the life of your loan. Overall, it makes sense to refinance your mortgage if you can save money on your monthly payments, switch to a more stable mortgage type, access cash for home improvements or other expenses, pay off your mortgage before retirement, or make your monthly payments more manageable. While there are many good reasons to refinance your mortgage, there are also some situations where it may not be the best choice. For example, if you plan to sell your home in the near future, refinancing may not be worth the upfront costs. It can take several years to recoup the cost of refinancing, so if you're planning to sell your home within a few years, it may not make sense to refinance. If you have a low credit score or a high debt-to-income ratio, you may not qualify for the best interest rates when refinancing. In this case, it may be better to work on improving your credit score or paying down debt before refinancing. If you're close to paying off your mortgage, refinancing may not be the best choice. Refinancing can reset the clock on your mortgage and extend the amount of time it takes to pay off your loan. If you're close to paying off your mortgage, it may be better to continue making your regular payments and pay off your mortgage as planned. Finally, if you're already struggling to make your monthly mortgage payments, refinancing may not be the best solution. While refinancing to a longer loan term can lower your monthly payments, it can also mean paying more in interest over the life of your loan. If you're struggling to make your payments, it may be better to explore other options such as loan modification or forbearance. Overall, it's important to carefully consider the costs and benefits of refinancing your mortgage before making a decision. Refinancing can be a great way to save money on your monthly payments and access cash for home improvements or other expenses, but it's not always the best choice for everyone.